Welcome back. My name is Bitha Mwema. I'm your host for Markets Today. This afternoon, we are unpacking the second quarter 2020 GDP numbers that were published last week. The growth was minus 5.7% for that particular quarter. Joining us to unpack these numbers is Mr. Abraham Kamau, who is the Chief Executive Officer of Miradi Capital. Before the break, Abraham took us through the ugly part of what was happening in that particular quarter. In other words, who were the worst performing sectors and what next? As we come back, we now look at who are the best performing sectors as we try to articulate what then is the investment case for Kenya when you're looking at the economy and, more importantly, GDP as a trigger point for investing. Welcome back, Mr. Abraham.
Okay.
Tell us now, who are the good sectors? Who was not necessarily affected by what was happening, especially when we start off with agriculture, which is one of the largest segments of the economy?
I think the guys who are benefited, or rather who are most unscratched, is the food, which I'll qualify how, the food industry, the pharma care, and the logistics. Now, let me start with the food. The food in this sense.
Okay.
People, because of lockdown, because of paranoia, because of limited movement, because of low incomes, were preferring their food fresher, cheaper, faster. So there was a demand for
fresher, cheaper, faster.
Yes,
Is that possible?
Yes.
Yes.
So now there were end-to-end solutions.
Okay.
So the person growing it was the person bringing it. So you grow them, you grow the stuff, or you have outgrowers, then you bring it together, you bring it straight to me, to my house.
All right.
So in so doing several things, you achieve the faster. You achieve the cheaper because the 5 or 10 brokers who are at Marikiti have been cut out. So the price, I can actually get a very fair price and still make a higher margin than if I had made it through the current system of brokerage, where the people who get the most are the people who do nothing in the middle. You see, they didn't produce it, but
yes.
they're the ones making money out of it. So there's that. So you find now I'll talk about logistics at the end. And that's where logistics comes in, because most of the people who are growing don't have logistics of getting to the end. Now the people who are already built to that, the Sendis and the rest. So there came their gap. And also guys also came in to do the same thing. So because everything was being sent. Anything you want it brought to your house. The pharma care, in terms of course, people want to take supplements, people want to take to sanitize, people want to wear masks. So that segment, PPEs, so that segment also was doing well, and it continued doing well for a long time. And with that also throw vaccines while you're at it. So around those sectors, I think they'll be around and they'll continue doing well. But now, in terms of reviving the economy, that's where we need to start building from. That now from that agriculture, we can now start building the agri manufacturing around that. It is the same model. So those things come, they are packaged, whatever they are packaged, and still brought to this guy. Because people now, even Mamboga now, even if you look at your local store, they are also delivering because they realized their people are going away. Because people are not leaving the house; they are staying safe, they are staying home. So then the model has to change. Supermarkets have gone that route. In fact, supermarkets are now threatened because the Sendis and the safe borders, they were purely logistic companies. But what have they done? They've backward integrated and created digital marketplaces.
Wow.
So they don't need the Tuskies and the Quick Marts.
Yes.
The Quick Marts and Tuskies need them. So those guys are learning very fast that they also have to develop their own logistics to just manage that risk, that these guys could pull the rug and tell them, you know what, as we only do our own stuff.
And I mean, that's an interesting perspective, because then as a supermarket, if you have to compete, you're already working in a model where working capital is a hard thing, because you are stocked up with many things that you have to wait for a certain period of time to be able to sell, then get your money back. But then now, if you're looking at a digital marketplace, whereas before a supermarket was a physical marketplace, then what happens for the retail sector as we know it?
To me, I think in the next 2 years, supermarkets will diminish in value, not commercial value, but in usage value. The same way banking halls have no value for you and I. You only go there if you have to pick a physical checkbook, maybe once a year or once every 4 years. So what probably will happen if, for example, let me use the example of Naivas, maybe they've got about 12 stores, maybe let's say in Nairobi. What they'll actually probably do, what they should do, is have regional stores, warehouses. So just have, so that you go to your portal, you pick your stuff, the app is able to tell which is the nearest store to you, they're picked, they're packed, and they're sent to you. Because why have all that infrastructure when one, it's just like every bank, they are banking on people where people don't come. So, and clearly, the new consumer, who is this young consumer, doesn't want to go to the market. You know, this is a different kind of guy. Yes, of course, that's the new guy. The same guy who's killing the newspaper, the physical newspaper, because he doesn't read it. So we have to go with that new consumer. So for them, as you're saying, that model is they're playing catch up, because most of them do not have that portal. Because all they did was, you know, because there are guys who can send them home, so they just put on a motorcycle and send it. But people want to be organized in such a way that they know I'm picking 10 items and I want them delivered to me at 10.
You know, Abraham, what you're saying is both exciting and quite frightening,
yes,
so to speak. Because in a way, we've all moved onto a digital platform, and we are all looking for digital marketplaces for whatever it is that we need to buy. But then the reality, Abraham, is the owners and the proprietors of these digital marketplaces are not from Africa, but then they have provided an opportunity to access. So when I'm looking at investments, if I look at my expenditure, my share of wallet today as Mbithe, I find that I'm probably paying for things or paying for access to communities that I had never had to pay for in the previous past. And in a way, I'm preferring to keep paying for them because they're adding value. So now the question then becomes, we are looking at the GDP numbers today, and the ultimate question we are answering is where are the opportunities on a sector-specific basis? So then what does all of this mean for investments in Kenya? In other words, should I be buying Safaricom or should I go buy Apple?
Yeah, I hear. Of course, this patriotic card has been played many times. But even if you stay with the logistics and digital platforms, there are very good digital platforms in Kenya. Okay. And I'll be very candid. Let's use the example of Jambo Pay.
Yes.
They are massive. So they can do anything anybody else can do. I'm not holding brief for them, but that is the reality. They can take on the Glovos and the Sendis of this world. But it's upon Kenyans to decide.
Yes.
Well, what do you want to do?
What do you want to do?
What do you want to do? Do you want to promote our own? Or do you want to continue the way you're used to, or promoting everybody who comes along? Yeah. So it's, and again, as they say, consumers vote with their money. Here, the economists, they call it the reveal preference theory. You reveal your preferences by how you spend your money. Okay. Kenyans clearly love things that come.
All right.
So it will take us a while.
So it will take a long while.
It will take us a while. But the thing is, those options are, it's not for lack of option, it's because they want.
Yes.
And because they can.
Yes.
But if they understood the ramifications of GDP as opposed to GNP, that the more you spend here, the more you grow your own economy, the more you grow your own, the more it's a ball. But that again is subject for another day. So to cut a long story short,
yes,
there's a lot of space, especially in digital markets, because if pharmacies, you can now get your medicine through a digital platform. I mean, that is medicine. Yeah. So if they've cleaned it to that level, you imagine how easy it is to do groceries. And remember, for these digital platforms, they have no stock. These people run a system of just in time. Exactly. So when you run a just, Uber doesn't have, you don't need to stop stock. So they have a just in time. So they have an agreement with Weetabix, or is it Coca-Cola, that we will allow you access to this market. So we'll tell you we have these orders, we have these warehouses, you bring them, we take them. So we don't need any stock because we're not in that business of keeping stock. Supermarkets also have had a good time, because most supermarkets that are these big names you see, they actually don't own anything, because even the stock that said they've not paid for it. They're on 60 to 90 days, whereas they're being paid cash. Yes. So even the issue of them going down, really, between you and I, it has nothing to do with cash flow.
So you just need to own access to the last consumer, the last mile of connectivity to the consumer.
Nowadays, actually, it's your consumer and the data around your consumer.
Okay, fair enough. Yes. Okay. So you've talked to us about the outlook of GDP. You don't expect it to get considerably better. We've talked about the different sectors and identified the opportunities. Now, Abraham, when we come to then what's the investment case for Kenya? It's a bit easier to understand the investment case when it comes to fixed income, because clearly you're telling us we are running a government that has a deficit and it needs to fund that deficit one way or the other.
Yeah.
So then how do I look at it? Where do I put my money today? Do I go put it as a deposit? Do I wait for the government to issue treasury bills and treasury bonds? Or do I even put it in stocks? Because earlier on, we were evaluating the case for stocks.
Yeah.
Yes, the NSC is cheap.
It is.
But I haven't heard you say that there's value being appropriated to any company on the NSC so that I should possibly pay attention. Where would you allocate money today?
You see, there's the based on the current psychology people have. You see, investors, unlike machines, investors are human beings, so they're driven by emotions and biases. The current emotion and bias is that we have COVID and we may not see tomorrow.
Yes.
That is the reality. Everybody, they may not say it, but everybody knows it at the back of mind. We all trying just to make it out of these woods. So if you look at I'd call it a liquidity spectrum, where on one side you have cash, and on this end you have property. So you can do cash, then you do call deposits, you do fixed deposits,
okay.
you go for stocks, you go government paper, all the way now to rates, to physical property. What will inform where you sit on this spectrum will be, first of all, your investment horizon, your appetite for risk, and your outlook for the future. Mm-hmm. If you're the most paranoid person, all your money will be in cash. In fact, not in a bank where you can see it. Physically, okay. It will be next to you.
All right.
Preferably in your mattress. Then now, as your risk appetite goes up, you'll start putting some in the bank, some in the house. Then you start putting a bit of it in stocks. Because stocks, you'll only put your money in stocks if you have a long-term horizon. Because yes, it is cheap. But you see, the gains or losses now are still paper until you cash them in. So if you want to put it, if you put money in stocks, probably in 5 years, the people who do it now, they'll laugh. Okay. But see, somebody saying, I'm not sure I'll see tomorrow. So why am I talking about 5 years? So it is that psychology. But there are people who know, you know what? Either I'll make it, I won't make it. If I don't make it, too bad. Okay. But if I make it, then I'll be good. So it's people's psyche. There are people who are optimistic, there are some who are pessimistic. So, and that's what informs, you'll find the same person exposed to the same information, they invest differently, based on their emotion and bias. But stock, in terms of as an objective investment, is a perfect. In fact, it could never have been a better time. In fact, I was saying that if I had money, I would buy the entire stock. So I put it in my pocket and just sit. Yeah, okay, and you're good to go. But you see, also it means that that's money you don't need in the next 5 years, because the dividend policy for companies will be really harsh. Companies will retain as much money as they can to recover. Okay. So they won't be. So you'll be buying it for capital gain, mostly not for the dividend. So that's your focus. Yeah. Okay, fantastic. Is there anything else that we might have missed when we're looking at Kenya's GDP and the outlook? No, I think the one thing that numbers don't capture is resilience and the psyche and the ethic of people, the ethos. Kenyans, despite all that is happening, if you walk out of here, life is going on. Somehow, people still wake up. You know, nothing puts Kenyans down. And that is one thing that you can really put a finger. That's why you see multinationals will come here. You may not have the best investment climate, but they stay here. Why? Because the average Kenyan worker cannot be replicated anywhere in the world. Mm-hmm. Yeah, so there are certain things about Kenyans that make you believe that despite all these gloomy numbers we've crunched here, they could just surprise us. Okay. Yeah. So the people are the value. One of the people. To me, Kenyans, they are unique people. They're people who are very hopeful. People who believe, literally getting water out of a stone. Yes. And they do it most of the time. Okay. Yeah. Fantastic. Thank you so much, Abraham, for that. So Abraham has left us with a lot to think about, but ultimately what he has told us is that by the end of the day, you are the value in this country. You could be looking for investment opportunities, but you also have to consider that the people, and that's you and I, also make up part of the investment case for Kenya. What do I hear him telling us? That digital economy, the digital marketplace is the way forward. And I think what COVID-19 has done for all of us, at least for the majority of us, is shown us that we must be agile and move. So if it's
finding out a business to invest in, there are some businesses that are affiliated with technology and have been leveraging on technology to be able to drive their case. But from what Abraham has said, my takeout is this: there's a new dawn that's approaching, not only just for Kenya, but for the world at large. Kenyan, as an individual, we are unique, we are hopeful, and the labor force is extremely smart and switched on. So there is an opportunity, perhaps, for most of us, or at least for most of you who are watching, to actually get out your paper and pen or your phone, write up a business plan, and try and test yourself and say, what can I do to build a business around myself, as opposed to waiting for somebody else to employ me, or as opposed to investing in somebody else's business. I hope that was worth your while. We look forward to having you once again tomorrow, same time. That's all from us. Thank you and good afternoon.